And that's kind of what he says of one up on Wall Street. He's saying you are the little guy, right? You are not Wall Street, but you have one up on Wall Street, and here's why. The number one book for stock market investors, specifically stock pickers. Okay, that's what we're getting into today. If you're new here, I'm Austin. I'm a co-owner of cloudmusicsuite.com, and on this channel, we talk about all things money and personal development. So if that sounds up your alley, go ahead and subscribe. I'm very glad you're here. Drop a comment and a like if it's your first time. Best book for stock market investing. Here it is. One Up on Wall Street, okay? One Up on Wall Street by Peter Lynch is, in my opinion, the best book for someone who wants to invest in the stock market. And let me tell you why. So first, before I tell you why, I have a confession to make. My confession is, well, I've made a few videos on this channel about the easiest way to invest in the stock market and the least stressful way to invest in the stock market, and that's indexing, right? Buying an index fund and slowly over time just putting in the same, $300 a month or $500 a month or $1,000 a month, and you can definitely reliably get yourself, based on historical data, you can get yourself to be a millionaire, okay? Through pretty dang easy, just with time and consistency and a little bit of money, you can get yourself to millionaire status. I do believe that, and that is true, but I also believe that individual stock picking is definitely something that can move your portfolio in the right direction in terms of higher average returns, if you know what you're doing. It can absolutely do the opposite if you don't know what you're doing. So if you are going to pick individual stocks, I think getting knowledge from dudes who have done it at the highest level, that is necessary. Like, it's a necessity. You have to, in my opinion. You're just gonna, maybe you'll get lucky for a couple of years and make some good profits, but if you're uneducated and you're just picking random story stocks that are hype stocks, you're gonna lose your butt sooner or later. So One Up on Wall Street, a little bit about Peter Lynch, is that he ran the Fidelity Magellan Fund. This is a mutual fund for a long time, and while he ran it, I don't remember the exact amount of years, more than a decade, he got 27% average returns. That is bonkers, like ridiculous. If it doesn't sound like a lot to you and 27 doesn't sound like a crazy number, that is a ridiculous number. This dude is arguably one of the goats of investing, and specifically picking individual stocks. Why I love it so much is two main reasons. Number one, it feels like Peter Lynch is literally sitting next to me while I read this book, and he's just talking to me. It's written in a way that is very, very digestible. So you don't have to be a stock market whiz and a stock market genius and understand all the terms and terminology. If you do, that's fine, but you don't need to in order to understand this book. That's why I think everyone who wants to pick individual stocks and doesn't just want to index, gotta read this. Okay, you can definitely understand it, like today, because he puts it in regular terms. And I think that's an important part of any kind of teaching, is to take really decently difficult concepts and break them down into easy ways. And he says all the way through the time, he's like, look, you don't need to be a genius. You don't need to be a genius to be a stock picker. Can you do simple math? Can you do 100 plus 100? Can you do 100 minus 200? Look at that, negative 100, you're a genius. And that's all you really need in order to pick stocks. You need to be able to read, and you need to be able to do simple math. So I love that he feels like it's overcomplicated by the masses. And that's kind of what he says of one up on Wall Street. He's saying you are the little guy, right? You are not Wall Street, but you have one up on Wall Street, and here's you're a regular person. You go out and you look at things with your eyeballs. So some of his best investments ever have been in relatively boring companies, like Stop and Shop, like Dunkin' Donuts, like a freaking funeral home company that he just saw. He saw in Boston, Massachusetts, like, dang, there's this company called Dunkin' Donuts. They've got great coffee. I like their donuts. He went to this location. It was great. He traveled and saw another location. That location was busy as heck as well. He was like, wow, that's interesting. Why don't I look into this company? He got into the company when there was almost no institutions, no big money was in it, no Wall Street, no corporation that was on Wall Street was interested in Dunkin' Donuts in the slightest yet. He met the management team, he dug into the financials, he loved everything he saw, the balance sheet was in a great spot, he invested and made some just ridiculous times his money, like 30x or something. Best investment ever that he ever made was in Dunkin' Donuts. And then that was pretty much his investment way of finding stocks from then. He would look around with his eyes, go eat a sandwich from some restaurant. If it's a great sandwich and it's a great service and everyone seems happy and they're building more locations, that's a stock to look into if it's a publicly traded stock. And that was another thing he said, always go check. Go ask, is this a publicly traded stock? Are you guys on the stock market? Go look it up, all right? It's worth a shot. It's worth a look. And he says, look at 1,000 companies, invest in one. So you just always got to be looking for investments. Anything you buy, right? If you didn't know that Apple was a publicly traded company, but you love Apple products, man, you would have missed out in like, say the 2000s. If you invested in the early 2000s, you would have made like 20, 30x your money. So anyway, that's one of the reasons. And then the second reason is he gives so many amazing examples of a stock that went great for him and inside the Magellan Fund, and that he made 2x or 3x or 15x on, and why it went well. What went well for it? How did he know that it went well, and what mistakes didn't he make? And then on the other side of that coin, he says, and I also invested in X company, and with this company, didn't go so well. I lost 80% of my money and sold my shares at a loss, and it was really tough and it was super unfortunate. And here's what I missed. So he talks you through, as a guy that was on Wall Street, as a guy that's investing big money, making huge decisions on other people's behalves, he shares in this book literally every mistake he ever made while running the Magellan Fund. And what he's doing is he's picking individual stocks. So he teaches you, hey, if you didn't have a good look at the balance sheet and the company went south, but you bought shares prematurely, that's probably why. They had a terrible balance sheet. They were bound to go bankrupt. You didn't look deep enough, or the management team was terrible, or there was a competitor over here that could easily take over, or just flat out buying into the hype too much. There's all kinds of companies that are amazing companies, but it's not time to buy the stock yet because the stock is disgustingly overvalued. We've seen, if you've been in the market for a little while over the last little bit, we've seen so many companies get slashed 50, 60, 70, 80, 90%. Were they trash companies? No. Some of them were even profitable, but they were so overvalued. And he talks about all the different metrics, price to sales ratio, price to earnings ratio. He talks about book value and whether he thinks book value is a good metric or not. It's a jam-packed book. If you want to be a individual stock investor, not an index investor, but an individual stock investor, I would highly suggest picking this book up. I learned a lot. I keep reading chapters that I've already read over and over again. And each time I'm about to potentially open a position with a new stock, or even if I'm going to increase my position, I'm thinking about doubling down on something like the Honest Company, like I did recently, I'll go back and I'll read the chapter about valuation, or I'll read the chapter about fast growers, or I'll read the chapter about what went wrong in all these stocks, or I'll read the chapter about acquisitions. Okay, so great book, great resource to just have in your back pocket. I don't think it's a read it once thing. I think it's like read it 3-4 times. Read it every time you're about to make a new investment. I'm very grateful that Peter Lynch made this book. He's got a few other books. I know this is the big boy, but I'll absolutely be reading all of Peter Lynch's other books as well. I have a link in the description for One Up on Wall Street. Go ahead and pick it up if you want to pick individual stocks. Let me know what you think in the comments. And that's all I got for today. Much love as always. Comment, subscribe, like, and have a great day.